Audit is a word that can strike fear in the hearts of taxpayers. However, the chances of an Internal Revenue Service audit aren't that high. Between 2010 and 2018, the IRS only audited about 0.6% of all individual tax returns. And being audited does not necessarily imply that the IRS suspects wrongdoing. The IRS says an audit is just a formal review of a tax return to ensure information is being reported according to the current tax law and to verify the information itself is accurate. Hi, I'm Larry Mengerink, certified financial planner, accredited investment fiduciary, and founder of Park Lake Advisors. I'd like to welcome you to another edition of 5-Minute Finance. The IRS selects returns for audit using three main methods. The first is random selection. Some returns are chosen at random based on the results of a statistical formula. The next is with information matching. The IRS compares reports from taxpayers, W-2 forms from employers, 1099 forms from banks and brokerages, and others, to the returns filed by the taxpayers. Those that don't match may be examined further. And the last is related examinations. Some returns are selected for an audit because they involve issues or transactions with other taxpayers whose returns have also been selected for examination. There are a number of sound tax practices that may reduce the chances of an audit. The first is to provide complete information. Among the most commonly overlooked information is missing Social Security numbers, including those of any dependent children and ex-spouses. It's also important to avoid math errors. When the IRS receives a return that contains math errors, it assesses the errors and sends a notice without following its normal deficiency procedures. And be sure to match your statements. What do I mean by that? Well, the numbers on any W-2 and 1099 form must match the returns for which they're tied. Be careful not to transpose numbers or accidentally type the wrong number. Those that don't match may be flagged for an audit. Learn from your mistakes and don't repeat them. Although the IRS may seem unwieldy and unorganized, it's quite the opposite. The IRS remembers those returns it has audited in the past. It may check to make sure past errors aren't repeated. Be sure to keep complete records. Now, this one doesn't reduce the chance of an audit, but it potentially makes any audit that much easier with IRS requests for documentation. As a quick disclaimer, the information provided in this episode is not intended as tax or legal advice, and it may not be used for the purposes of avoiding any tax penalties. Please consult a legal or tax professional for specific information regarding your individual situation. Now, with that disclaimer out of the way, that's it for our quick hit on IRS audits. Many may not realize that if you do get audited, they've changed over the years. Most audits don't involve face-to-face meetings with IRS agents or representatives any longer. In 2019, the last year for which data is available, nearly 74% of audits were actually conducted through the mail. Only 26 involved face-to-face meetings. If you have questions, don't hesitate to reach out via email at info@parklakeadvisors.com or phone 517-887-9905. Be sure to follow us on Facebook, LinkedIn, Twitter, YouTube, and popular podcast platforms worldwide for more quick financial bites. Until next time, happy learning.